people more worry when you're looking at the surveys that they're taking of Fortune 500 executives. They believe at the highest level almost ever that there's definitely going to be a recession coming. So you would think like all this negative stuff would be priced into the market and say, okay, we're due for a short-term bump. And I think that's what we saw last week. And, with a little hope that, hey, you know what, maybe the Fed won't get too crazy here. And then the CPI threw a wrench in that. But I tell you, it's not easy to find catalysts. Just like for bears, how many times did we hear over a 12-year period of how many stocks were terrible and the market was going to crash and people revising books and it's going to crash. And again, these guys were looking and saying, wow, we're so expensive. Look where they are. And they were right, but we had zero interest rates, which changes the landscape. So that multiple could trade at 20, 25. You see technology companies like NVIDIA trade 60, 70 times earnings. You have the growth behind it. That's fine. But now you're removing 100% of the growth out of the market because you're not getting it from China. Wait till they report GDP. Holy shit. It's going to be the lowest level in decades, probably. I mean, you guys know what's going on with Europe and energy. I mean, it's a major crisis there. And now you look at the U.S. where we're seeing demand destruction every place. So it's basically a global recession in the face of you aggressively raising rates, looking at a lagging indicator that showed rentals are up a lot. It showed a lot of areas are up a lot, but rentals are actually coming down. If you look at real-time data, this is real-time data. Have come down. So, they're going up a much, much, much slower pace. They were going up 4x. Again, we've seen 18% increase in rentals year over year. And then the next year, another 18% increase in rentals. When you get a rental, it's over 6 months. I know in Florida, when you get a rental, it's got to be 7 months, right? I don't know, it's tax purposes or something. But you can't really get a rental. And I'm not talking about Airbnbs, but an actual rental. They won't rent it for 3, 4, 5 months. You got to do 7 months. So that price is going to stay, it's hard to get that price down and you're going to see it elevated for some time, which means if you're going to be looking at the CPI, you're going to go to 4.5% and you're really, really going to crush these markets. I mean, the amount of debt we have in the balance sheet, it's a little scary out there. You have to worry. I'm hoping that we're going to see a lot of like this demand destruction that we're seeing. It's going to result in profit and companies lowering their estimates considerably this quarter, next quarter, and the quarter after. You're going to see the market really come down. You're going to see prices come down. Which we're seeing in a lot of areas. And when that happens, the Fed is probably going to be like, okay, enough's enough. I think that's going to happen over the next 2 months. I think you're going to see numbers that are the ugliest numbers that we've seen in decades. And the Fed's probably going to have to say at least, listen, we're not going to go pedal to the metal anymore. We're not going to tighten and just go nuts. Because as long as they're raising rates, it's very difficult to make the case to own stocks. I'm not saying all stocks. You're going to find diamonds in the rough. There's areas we'll cover in a minute. It's very difficult to own stocks while the Fed is continuing to raise rates, just like it's hard to sell stocks and short stocks. And you could go to Chanos and look at the best short sellers in the world. I'm trying to short every single stock over the past 10, 12 years. It's very difficult to short stocks when you have zero interest rates and you have the Fed buying bonds and constantly bailing out, just there to just throw money into the system constantly. It makes it impossible. Now we have the opposite effect, and you have to be very, very careful here. Let's see. It's all about the Fed. Let's see what they do. But, the PPI was definitely a good number. I think it ensures that we're just going to get a 75, just a 75 basis point hike, which is, unprecedented. We're going to do 3 in a row at 75 basis points. Holy shit. I mean, look out.
3 in a row. 1, 2, 3. Jerome Powell. That's good.
I mean, from being so wrong, right? To saying, okay, I mean, you're looking at this data. Home buyer mortgage demand just came out. It's down 30% compared to last year. 30%. That's massive. I mean, makes sense. Mortgage rates are around 6% now. I highlighted yesterday a bunch of companies that they're laying off people. Twilio is the latest now. They're laying off 11% of their staff. You're going to see hundreds of companies laying off. I mean, profits are down year over year. If you take out energy, profits are down. And they're going to be down considerably going forward. We're seeing it for everything. They're going to be down considerably. So, because you still have, inflation working their way in the system, you see more and more companies not having that pricing power, which is like the double negative. It's going to crush them. And that's why you're seeing, companies like Nucor out of nowhere, listen to their last quarter. Holy cow, they're high-fiving each other, drinking freaking champagne. This is the greatest. We're awesome. You lowered your earnings. I mean, the stock's down 8% today, and it's well off its highs already, right? It's trading like in the middle of the range. But the last quarter was a record in earnings per share. So, and they were so bullish going forward. But when you're telling me the record profits that you had at $9.67 last quarter in Q2, and now you're lowering to $6.30, $6.40. I mean, just to put that in perspective, not only is that considerably lower, right, almost a third, but last year it was at $7.28. So you're lowering it year over year, which is, that's big. I mean, you should still be seeing stronger demand. That's why we're seeing prices still up year over year. But this came out of nowhere. Like, again, it's coming out of nowhere because you're seeing very quickly how demand is just falling off a cliff. And man, it's not an easy market. It doesn't listen, you listen to this podcast to get ideas. You subscribe to my newsletter to get ideas. There's going to be some ideas, but there's certain times that you have to be very, very careful. This is one of those times. This isn't different. I know all the indicators. If you're a contrarian, it's going to be telling you, you know what, you should be buying. And like you said at the beginning, what'd you say about, the NASDAQ falling that much?
Yeah, each stock, yep. In the NASDAQ 100. That was on Sentiment Trader, I think. Mm-hmm. Yeah, and when all the big tech stocks or something fall on the same day, then year over year, they give different projections for month out, 3 months, 6 months out. And again, I'm going off memory. It's on the Twitter, But I believe it was all of them showed 1 year out for positive returns. Mm-hmm. So their thing was, hey, don't sell just because you have a sea of red kind of mentality is what I was picking up. And that's good. You never just want to throw in the complete towel and all that. Mm-hmm. But it's okay to know that, hey, tough times are ahead. You got to be selective. It's okay to build more cash and things, just like a lot of your indicators are showing that you'll break down later. But, it's okay to be nervous right now because a lot of things are out of your control and the powers that be are pulling levers that are trying to cause pain. Hell, Powell said it in his speech a week or two ago. He used pain how many times? It's like a drinking game, Frank.
It's funny because I saw, Biden speaking and here's the thing about the current administration. Here's why, I was bullish, a couple months ago where the market sold off completely and we're still up 10% from the lows, right? I mean, we could test them. I don't know. Let's see what happens over the next month or so. It's going to be, very important with the indicators that are coming out, what the Fed's going to do, what they're going to say. But, when I'm looking at Biden, he continues to say the economy is great. And they're citing two things. They're citing the job market and they're citing wage growth. And those two things are going to disappear very quickly. I mean, you're looking at tons of companies, hundreds of companies are going to be laying off employees. Now, if you look at the past few years, Daniel, you know what? If you're an employee, you're in the driver's seat. Just like when it comes to housing. Sometimes it's a buyer's market and sometimes it's a seller's market. Well, it used to be a buyer's market in terms of when you're looking for jobs because people needed jobs. They needed people because demand was through the roof and we needed people and good people to fill these jobs. And, sometimes it's hard to find great talent in certain industries, right? If oil's through the roof, you can't just hire a whole bunch of freaking people who never been on a rig before, right? You got to train them and stuff like that. So the guy who has experience could be like, you know what? I want 3 times if you want me. And they're like, okay, we need it. Oil's at 120. We need it. It's a different market now. Now it's a seller's market because now the companies are going to be in control. Why? Because you're going to see all these layoffs and a lot of them are going to be executive positions and talent and stuff like that. Those are guys who are making the most money. It's all about profits for them. Profits are down. They're going to be laying off. You're seeing it across the board with so many major companies. And you're going to see every single day it goes by more layoffs, more layoffs, more layoffs. And they're not talking about 3%, 4%. It's all 10% to 20% of their staffs that are laying off. So now you're going to have a whole bunch of talent that are going to be fighting for jobs because they need to pay their bills. And what is that going to result in? It's going to result in wage growth slowing. And it's going to slow that. Those are two indicators that could slow considerably over the next 2 to 3 months. And what is Biden going to do? Because the most important factor in any election is the economy. And you're going to have the Fed raising rates while you're seeing demand destruction. And you're out there telling everyone everything is fine when everything is not fine for the majority of people, especially on the low income levels. I mean, it's worse for them. I mean, higher energy prices really hurt them. But what are you going to do going into an election that's very, very important for both sides, right? For both sides, with the Senate and the House up for grabs. So for me, looking at the markets and being bullish, I'm like, okay, the Fed and the president, again, it's supposed to be executive. It's supposed to be different from separate. We know it's not separate. Even with Trump, it's not separate. He was like, okay, now we got to start lowering rates and they lower rates. Remember, the Fed, just like the SEC is not going to come after the people that are trading, right? But all the senators that are trading, because the senators are the ones that hire the people at the SEC, right? So they're going to be very, very careful. Same thing with the Fed. And, you like your job and everything. So, you're not going to say to the president, give him the middle finger because, they're the one that appoints, that and the vice chairmans as well for the Fed. So, it's usually hand in hand. But, I was thinking, okay, he has to turn around and say, we got to somehow lower rates. But if they're not going to lower rates, Daniel, into the election cycle, I mean, it's going to be crazy. I don't know what they're going to do. They have to come out with something. Again, a lot of this political, you need to pay attention to it because, you know, if you paid attention during Trump, as soon as they raised rates, Trump's like, we need to lower rates immediately. They started lowering rates. He did the tax breaks and stocks surged. I don't care if you hate Trump or not. Stocks absolutely surge. Here, you want to see the same thing. This current administration has to do that where economy, you know, people feel better about the economy and they don't see recession, but how are you going to change that within a month and a half with the elections coming up in 2 months? I don't know. I really don't know. So I thought it was a given that the Fed would come out and be more, you know, just taking a more easy stance. But if they're not going to, we could see this market fall considerably from here over the next month and a half.